Hello, today we're going to talk about debit and credit cards. What is the difference between a debit and a credit card? Debit and credit cards have the same appearance and can be used the same for purchases, but there is a difference between them. A debit card allows access to money that a person has deposited at the issuing financial institution. When you use a debit card, the money in your checking account is withdrawn and transferred to the vendor. When you use a credit card, you are actually being given an unsecured loan for the charged amount. This creates a debt that requires repayment. Should you use a debit or a credit card when you are making a large purchase? Why would you not use a debit card to make a large purchase? Typically, debit cards will have a point of sale limit, which means that there is a limit on the amount that can be spent on a single purchase, or a daily total limit. These limits are put into place to protect you against fraud, since the money for the purchase is immediately withdrawn from the money that you have in your account. Other than limitations on debit cards, there are other advantages to using credit cards for large purchases. Credit cards can help you make large purchases that you might not immediately have enough cash for, since you can stretch the cost over time to make it more manageable. Many credit cards also offer certain travel insurance, fraud protection, and other consumer protections. Another advantage of using a credit card is to help you build a positive credit history. How does having a credit card affect your credit rating? Credit cards are considered unsecured debt because you're borrowing without putting up any property as collateral. When you use a credit card, you don't have to repay the full amount right away, as you are borrowing from the card issuer. There is no pay-by date for when the debt must be repaid. If you do pay the balance each time you receive a bill, you will not pay anything extra typically. However, if you don't pay the balance in full, you will have to pay interest on the unpaid balance. The interest is based on your card's terms and will continue to accrue and add up until you've repaid the amount you originally borrowed. Credit cards do require minimum payments, which are typically 2 to 3% of your balance. This minimum payment is the amount you must pay each month. Beware of only making the minimum payment, because the interest will continue to add up and the amount you owe will continue to increase the longer you wait to pay off the balance. Having a credit card can have a positive effect on your credit rating. If you make at least minimum payments by the payment due date, it will show a positive payment history. Late payments can have a huge negative effect on your credit rating because it shows that you are not reliable in paying back the debt. Credit utilization is a measure of how much of your available credit you are using at any given time. It is measured by taking the credit card balance and dividing it by your credit limit. When rating your credit, most credit bureaus like this measure to be below 30%. If you have a high credit utilization, it may negatively affect your credit. The ideal situation for credit utilization is to pay off the balance each month. While establishing credit can have a positive effect on your credit score, if you have too much credit or apply for a credit card at every store you shop at, it could have a negative effect on your credit rating because the increased number of times that there are inquiries on your credit, which also affects your score. What is the difference in a credit card from a bank and a credit union? Many banks and credit unions offer a variety of credit cards for you to choose from based on your needs. Some may offer a lower rate, cash back, rewards, or other features. Sun Federal does not charge an annual fee. Some banks may charge an annual fee to have the credit card, whether you use it or not. There are other fees typically connected to credit cards, such as late payment fees and over-limit fees. Typically, these fees will not be as high at a credit union as they may be at a bank. The interest rate is something that can be a huge factor in choosing a credit card. The interest rate on a credit card from a credit union could be less than 10%, where the rate at most banks is more than 20%. Let's quickly review what we have learned about debit and credit cards. Would you use a debit or a credit card if you wanted the money to be taken out of your checking account right away? A debit card is directly connected to your checking account and therefore would be used to take money out of this account. Would you use a debit or a credit card if you wanted to borrow money for a purchase? A credit card is used to borrow money unsecured. If you were going to make a large purchase, which card might you choose? Even if you have the money in your account, it may be better to choose a credit card to make a large purchase to avoid the debit card limits. Credit cards also allow you to pay the item over a longer period of time if you need to, and may offer a more secure purchase depending on your credit card terms. Would making minimum payments, having a credit card that has no balance, or making late payments adversely affect your credit? Making late payments show that you are not reliable in paying back your debts. Making a minimum payment may cause you to pay more in interest in the long run, but it does not negatively affect your credit rating. Having cards with no balance does not hurt your rating. However, applying for a lot of credit cards would. Thank you for joining us at Sun Federal to learn about debit and credit cards.